Hello, and welcome back. We are taking a look at Nvidia Corp. We have talked about Nvidia a few days ago, but they just reported earnings, and it looks like they are down about 7%, 6 to 7% is what I've been seeing here. And today they were up 5%, so it's almost balancing itself out, I suppose. But we do want to examine what happened, and so I made this video so that we can take a little bit of a closer look at the earnings report. And then maybe we can talk a little bit about Nvidia. Again, I have made videos about Nvidia in the past, but we can talk about it a little bit more here. Now, Nvidia stock falls on light guidance is what the title says here. And you will see that they reported their fiscal quarter earnings Wednesday, beating analyst expectations for sales and earnings. Yet the stock dropped more than 10% at some point. It's actually, as you saw, much better right now. We'll see what's going to happen tomorrow when the market opens. But they reported this 1.36, that's adjusted EPS, versus 1.29 that was expected. So they beat on this one. And they also beat on revenue, 8.29 billion versus 8.11 billion expected. So these are fine here. And they said that the revenue for the current quarter would be about 8.1 billion under analyst expectations of 8.54 billion. Nvidia stock is down over 43% so far in 2022. That is absolutely insane how much it has dropped. But as we have examined in the past, in previous videos, Nvidia is kind of overpriced in terms of its stock price. It's a great company, but looks overpriced. Now, the company is facing a challenging macro environment, as with pretty much everybody right now, and the operating expenses have increased 35% year over year. That's a lot, to 1.6 billion. They said that the revenue in the current quarter would be 500 million lower. So this is what actually is bringing them down, the guidance pretty much. They are strongly increasing their revenues, though. The revenue increase for Nvidia is absolutely tremendous. Total sales up 46% year over year. They are doing tremendously well in terms of sales. So for a company of that sort that is that big, going up 46% in sales, that is absolutely awesome. The data center business grew 83% annually, which is of course absolutely amazing, and surpassing the company's core gaming business, which sells graphics cards. We know about this, which also grew 31%. That's also great, but 83, that's absolutely insane. So we definitely want to examine the company, and we had in the previous videos that I have made, but it's good to see that the company is at least increasing its top line. Yet they're gonna be having some issues about their next, I suppose, earnings periods because of what is happening with the overall market. Really, they also announced that they had reached a settlement with the SEC over disclosures in 2017 about how cryptocurrency mining drove the company's growth. Because a lot of people are worried that it's the sales of the company and their growth has been growing because of crypto. And they definitely have a point about this one because crypto was super strong for a long time, as you know. And right now it's kind of, dissipating. The whole wave of the crypto craze looks to be dissipating right now. And so, as an investor, you are having a little bit of doubt here, thinking that Nvidia's sales may have a lot to do with the cryptocurrency landscape of the previous years. But it looks like they keep doing relatively well compared to the overall market, really. So we'll see, of course, in the next few years. But what we definitely want to be doing is examining the financials. Before that, let me tell you that the company has also authorized for 15 billion in share buybacks through the end of next year. So that's a lot, of course, 15 billion in share buybacks. And the company is relatively overpriced. It's actually significantly overpriced. And this kind of buybacks may sound good for investors that are already holding the stock because the outstanding shares are going to go down, but it's not a great idea for a company to buy back their shares where they are expensive, is the thing. And you kind of want to avoid that as a shareholder, even if they are buying back their own shares. And you will see here that the price to earnings ratio, the price to free cash flow ratio is relatively expensive here. So buying back shares may not be the best that you could do right now at this price. Of course, if you compare it to the 1 year high, which was 347 here, it's a great deal, it's a bargain. But if you compare it to the financials, we are still looking at a company that is relatively expensive. And this company is great in terms of returns, net margins here. They are doing fairly well, and they are increasing top lines and bottom lines very nicely, as you'll see here. But we do want to be buying at a better price, is the thing. What price? we can take a little bit of a quick look. Again, we're not analyzing Nvidia fully here because I have done it in a separate video, but just because we just examined the earnings and we're expecting Nvidia to be down about 7%, 7-10, we'll see where it will land. But you will see here that the revenue growth of the company has been tremendous, of course, and let's just go with something that is much more conservative here. We probably still need to go relatively high because Nvidia has been growing nicely. So I will go 10, 12 and 14. It's not super high, of course, compared to what they have been doing, because we do need to be conservative, and especially in the current inflationary environment. Now the net income margin, it's about 25 to 35% pretty much. Couple of years of 25, 26, couple of years of 35. So I'm going to go somewhere in between and see what we're getting, 25, 30 and 35. And the free cash flow margin is near 80, 90 and 100, I suppose. So let's do that. And the annual return of 13% is what I want to be making out of my DCF model here, is the discount rate. And I hit calculate and you will notice that the current price of the stock, it's probably going to be maybe around 155, 150 tomorrow, is still expensive, even for our high estimates, with a revenue growth of 14%, is still relatively expensive. Now, if we try, apologies, I'm losing my voice a little bit. So, if we try a higher revenue growth, let's just go with something like really high, 30% is what the company has been doing next to that, on the 5-year average, that they have been doing 34%. So near 34%, let's go 30, which is absolutely insane here, 30% for the next 5 years. But let's just calculate that so that we see what we're getting. And you see that even with a 30% revenue growth here, we are still red on the high estimates based on the current price. Now this will become green tomorrow, but you can see that we are very far. This is extremely offensive here. It's not going to happen more than likely, but you will see that if in these kind of estimates we are still in the red. And again, it's going to be marginally green tomorrow because the stock is going down. But as an exercise, you can kind of see that the stock price is expensive for what we'd like it to be. And we need to be actually waiting. We need to be patient, get it at a better price if that happens. Otherwise, just avoid it completely and buy a different stock. Buy different stocks that are cheaper, because again, this is a great company, but we don't want to be adding companies that are expensive, because when you buy expensive things, it's difficult to make a return, and so you need to be adjusting your expectations and actually try to get other companies. Even though this sounds like a great company to own, Nvidia, everybody would like to own it, you need to be owning the ones that are cheap, at least if you're buying it with your money and not getting it as stock-based compensation or something. So thanks for watching the video, and I hope you enjoyed. Please remember to leave a like and subscribe. You can always become a Patreon and get access to this tool, in which you can use all your own estimates in an unlimited manner, really, for any sorts of stocks. You can find links in the description box below this video. You can also join our Discord channel. We are discussing there every day and would like to have you around. We're having some very nice discussions about the economy, about stocks and everything, really, all sorts of investing things. Very cool. So would like to see you around, and thanks for watching this video, guys. Take a look at this other one that I made about Snowflake earlier, a company that is actually getting crushed after reporting earnings. It's down quite significantly at some point, even 20% or more at some point. I think it's down to 13% as I'm recording this video, but it's interesting to take a look. So yeah, you may want to take a look at this one, and I'll see you in the next video. Bye bye.